Okay, and we should be live here. Welcome to Thoughtful Money. I'm Thoughtful Money founder and your host, Adam Taggart. Welcoming you back here for our monthly session with precious metals expert Andy Schectman, who joins me here. Andy, how are you?
Good to see you, Adam. Thanks for having me. I'm great.
All right,
Thanks.
Andy, I got to say, I love that new studio. Every time I see it,
Thank
it's
you.
so professional.
Yeah, it's a lot better than my office with the barking dogs and the FedEx man ringing the doorbell, and it's nice. But thank you. When we brought Michelle McCory on, we had to level up a little bit to get to her status. So I appreciate it. It's nice. It's nice to have a place to come to. As an aside, since 2020, like everyone else, I was working out of my house for 5 years, and I forgot just how much I like actually putting on a nice shirt and going somewhere, having a purpose. So it's nice. I appreciate you saying that.
All right, well, that's good. Fortunately, this program forces me to have to put the collared shirt and the suit jacket on. If not, because I have worked from home forever, you folks would see a lot of
I
t-shirts.
think people would like you just as much in a tie-dye.
You're very kind. Well, look, until recently being in Northern California, that probably would have been very appropriate. Well, look, we are going to talk today about the fact that the market is now pricing in several rate cuts before the end of the year, or by the end of the year, and then additional rate cuts next year. And obviously, the president is leaning as hard as he can on the Federal Reserve to have them cut. And I think Jerome Powell, he's definitely seeing increasing dissent on the FOMC committee that not everybody agrees that the Fed should still be holding pat. And so, Powell is feeling increased pressure, and we're seeing increased signs that the economy is continuing to slow, and that gives the Fed additional air cover to say, okay, you know what, we think maybe a cut is appropriate now. So, as the odds go right now, we are going to be entering a future of rate cuts, starting likely as soon as next month. So, I guess first question for you is, what impact is that expectation of rate cuts having on the precious metals, on gold and silver, so far, if any, as you can see?
Well, I mean, if the Fed were to cut rates to help growth, as we saw the unemployment numbers, the revision of the unemployment numbers were horrendous.
Mm-hmm.
And it's funny too, because when the May and June numbers came out, like 250, 60, 70,000 jobs created each month, gold went down, the stock market went up. And then quietly in August, they say, no, not the 400,000 or 500,000 that we thought we created. It's actually only about 78,000.
Mm-hmm.
I mean, it's something like that. It was a massive reduction. So you're beginning to see the economy really slow down and layoffs happen. So arguably, this is what they're going to want to do. But this adds more fuel to the inflation side, especially with M2 already at a record. M2 is taken off. So when you have this happen, more inflation without boosting productivity, because I say that to you because we see the velocity of money at all-time lows. So they're it's like pushing on a string. They're trying to get all this money into the system, but the economy is slowing. You can see it through the unemployment numbers. You can see it through the lack of velocity. There's a massive disconnection between the equity market and Main Street. Ultimately, this is all very positive for gold, very, very positive for gold, because, you're talking about an environment where gold doesn't just go up because of the currency debasement. It goes up because almost everything else looks worse. That's just the truth of it. And you add fuel to the fire when you say, since June 1st, the institutionals, the insiders, right, the traders, they've been selling between 2 and 4 billion a week in stocks. And you have all of the insiders that are selling at a 7-to-1 clip. And you have Jeff Bezos selling $6 billion in Amazon since June 1st. You have the 3 or 4 biggest shareholders and board members of NVIDIA doing the same thing, and Buffett with $500 billion in cash. At the same time, you have the mainstream, or you have the public mainstream, mom, pa, all-time record in equities, all-time record in margin debt,
Yeah.
all-time record in option exposure. You're talking all-time levered, risky, all in stocks greater than the great financial crisis, greater than the dot-com bubble, and the insiders are going the opposite way. Now, to your original question, so that tells me the insiders are saying, we're leaving the sinking ship right now, something's coming, and the public is the opposite, all in. But on the metal side of things, the public doesn't have much exposure at all, but what we have been seeing month over month is extraordinary. Extraordinary in the amount of gold that's coming into this country. The people who are incredibly sophisticated know what's happening. And I want to draw an analogy to say these people typically know what's coming before the rest of us do. They are able to get the playbook. And if you look at the fact that my whole career, which will be 36 years this February, less than 1% of COMEX contracts ever stood for delivery. Now, all of the gold that's coming into COMEX, what we know of, over 100 billion since the beginning of the year, and I would argue that a whole bunch more is coming in not through COMEX. The biggest money in the world is importing gold in the United States at a level that no one has ever seen before. But more crazy than that, and I think this is a bigger indictment, and actually you got to wonder where the hell is it going and who's doing it, who's the big buyer. I think it's the Treasury, myself, or the Fed. But with all this gold coming in, less than 1% of contracts on COMEX, once they would post, like, okay, they expire August 1st, you can take cash, you can roll it forward, or you can stand for delivery. Less than 1% ever did. Just in the first 3 days of the August contract, we saw 2 million over 2,160,000 ounces of gold stand for delivery, which represented 100% of the 2,160 contracts that stood for delivery, that posted. 100% of them stood for delivery. And crazier than that, almost all of it is leaving COMEX. About 90+% of it is actually being offloaded. In years past, when we would see deliveries, people would say, yeah, but it's not really leaving. It's staying in the eligible category. There's eligible, there's registered. Eligible would be bars in the system that are owned by people like my clients in our Brinks JFK vault. We have a set of Brinks facilities around North America. Just one of them is COMEX. It's JFK. And the metal, that the 1,000-ounce bars that my clients hold there, those are eligible. They could move to registered, which are the bars that back the contracts. But all forever, the bar, when stuff would come in and we would cite deliveries, you'd see in the comments, yeah, but none of it's leaving. What does it mean? Just goes back and forth. It's almost all leaving now. It's one thing to go into eligible and stay there.
Right.
It's another thing to go to eligible and registered, which could then be delivered. It's a completely different thing to see it leave out the door. And I want to make one last question. I'm sorry to go on, but I want people to understand that whoever is doing this, they're doing it for a far bigger reason than maybe we can even explain, because in that ecosystem that I have 9 Brinks facilities with one COMEX, I had a client who made an incredibly large order, and the silver part of it was all 1,000-ounce bars, and the gold part of it was all kilo bars. Now, this is COMEX compliant stuff. And my very dear friend is one of the primary Royal Canadian Mint distributors, and I was securing Royal Canadian Mint gold and silver bars that he stages for companies like mine at Brinks JFK. He has some at the RCM in Canada and some at Brinks JFK. And I said to him, I said, Rob, she wants to store this stuff at Salt Lake City Brinks. He says, no, she doesn't. I'm like, what do you mean? Yes, she does. He's like, no, she doesn't, because it will lose COMEX eligibility and would have to be reassayed to go back in. And if you have these 1,000-ounce bars and you get someone like, Elon Musk says, I'll pay a $50 premium above spot for anyone who wants to sell silver right now or whatever, she's out of luck. I'm like, well, let me get this straight. It's sitting in Brinks facility. It gets moved by Brinks truck to Brinks Salt Lake City, and you're telling me that loses liquidity? I mean, it never left the ecosystem. It left the COMEX ecosystem. And even though Brinks maintained custody of it the entire time, to put it back into COMEX, it would need to be reassayed. So moral of the story is, when this stuff leaves, it ain't coming back. And that's something people need to understand, is that the supplies are slowly being drained. And this is completely bucking the trend. And the people doing this the first 5 days of the August contract between gold and silver, almost $15 billion worth of stuff was delivered in 5 days. Now, it's much more than that now. This was 2 weeks ago, but it almost all left. Where's it going? Who's buying it? Why do we not know about it? That to me signals the people doing this are very wealthy, very sophisticated, know what the hell they're doing, and they wouldn't be doing this if they didn't see where we're going with our fiscal and monetary policy, and ultimately where gold and silver are going. So yes, I'm sorry to have belabored the question, which could have been answered much more easily, but yes, this will be very bullish for gold, very, very bullish, as is the underlying fundamentals right now.
Okay. I also do want to talk about whatever thoughts you might have about rate cuts on other assets, stocks, bonds, et cetera, and we'll hopefully get to that in a bit. But a bunch of things to connect based on what you just said there. I also should I'm remiss I didn't mention this right at the beginning. I very much appreciate you coming on today and talking to us because I understand that this recording stands between you and the start of your celebrations for your 55th birthday. So thank you for taking the time to talk to us.
It's okay. Thank you very much. It's a birthday weekend for me. It starts, well, it is tomorrow, but it's going to start when I leave the office today. And yeah, it's crazy, man. Life's like a roll of toilet paper. You don't notice it spinning when you're young. And then all of a sudden I'm 55 and I can actually see the cardboard and it starts to spinning a little faster. I'm not saying I'm getting really, really old. I'm just saying it's crazy how fast it starts to spin when you get older.
Well, viewers know I'm a huge fan of analogies, and that's a great one I hadn't heard before. Well, folks, look, please give all your birthday good wishes to Andy there, whether you're in the live chat right now or in the comments if you're watching on the replay. All right, so Andy, so you basically said, look, we are seeing a lot of kind of end stage bull market rally signs, right? We're seeing the insiders essentially get out by selling 7-to-1 ratio or so, as you said, to the retail, who is buying hand over fist. So this is sort of the classic scenario of, if you don't know who the patsy is at the poker table, it's likely you. The retail investor tends to kind of join the party at the wrong time, right before the cops are about to show up. So they're in there buying hand over fist, as you said, record equity exposure, kind of record levels of speculation if you measure that by buying options and all sorts of things like that. We're seeing the risk on assets, the meme stocks, the random cryptos, on fire right now, which again is another great late stage indicator. So, okay. And you're saying, all right.
And then the opposite with gold, completely.
Exactly. So if we watch what those people in the know are doing, not only are they getting out of stocks, right, by selling them to the retail, they are getting into hard assets like the precious metals, and not just getting in like I'm getting some exposure in my portfolio to them. I'm actually getting these assets into my own personal control. They're taking them out of COMEX at
removing counterparty risk.
And look, I mean, you said we only have the first couple of days of data for August with delivery. I can't imagine we're going to be at 100% for the whole month, because just even for the first couple of days, that's kind of mind blowing. But is it safe to say that 100%, even for the first 3 days, is something you've never seen before in your career?
Yeah, never seen before. And here are the numbers for silver for the first 5 days as well. So this would have been August 1st, 4th, 5th, 6th, and 7th. So they received into COMEX 1,721,192.54 ounces. That was delivered into COMEX, right? 1.721192. You know how much was withdrawn, left the exchange? 1,890,316 ounces, more left than was received. And so that's one thing. But the 1-to-1 ratio you're talking about of not rolling when they post, standing for delivery, no, there's no way it'll be 100, because it's typically 1% or in that vicinity. To see it at 100% is it's 4 feet of snow in Death Valley in July. This is very unusual stuff.
But even if it's 4 to 5% for the month, I imagine that is still very diverged from what we normally see. Correct?
Yeah, I mean, the moral of the story is not only are we seeing players keep a lot of metal there because lots of deliveries are coming in and the numbers are going up, but they're withdrawing a massive amount of metals out of the vaults, and that in and of itself is, I think, really incredible. I mean, that's whipped cream on top of an unusual Sunday, because it's like these things just have never happened before, and now they are. So what does it mean, and who's doing it? Who's behind it?
Okay. Yeah, it's not necessarily snow in Death Valley in the summer. It's like raining cats and dogs and boiling frogs. It's just stuff we just don't really see. Okay, so folks, I do have a few more questions here for Andy that I'm going to go walk through, but then we are going to open it up to live Q&A. So just know, keep your questions.
I have no time constraint.
Well, you're a good man. I'll still try to keep it within the hour if we can.
You got it.
But okay, so big question, Andy. We're seeing record outflows of physical bullion from the COMEX. Where's it going? Is this going into BRICS vaults? Is it going into people's personal safes? Is it going into their island bunkers of the rich and famous? Like, where do you think this is going? I guess maybe do you think it's going into the Fort Knoxes of the world if you think it's a sovereign buyer that's behind a lot of this?
If I have a thesis, I believe, if I had to guess, if I had one guess, I would guess it's Secretary Bessent under the auspice of the Exchange Stabilization Fund, because it would be used for American security, he would not even have to run it by Congress, or at least in a very disclosed way, because I don't know, I guess who else could it be? Buffett, Bezos, a huge hedge fund. They're talking $100+ billion. Where is it going? And if you think about it, for those of you that own a mint box of silver, 42 pounds, 19,000 bucks worth of silver, well, what are you doing with $7 billion worth of silver?
What's I was going to say? This is a lot of mass.
We're talking semi-trailers full of it. Yeah. So I don't know where it's going. It's going to some people that are incredibly influential, and that in and of itself is also interesting. In that, how do you keep this quiet? Quiet to the point that none of the mainstream media even mentions the fact that you're seeing record inflows, more so than at any time since the Bretton Woods Agreement, where everyone sent us their gold. Record. This should be talked about. It's not. And the fact that it's not, and even I spend 3 to 4 hours a day, every day, 7 days a week, reading everything I can find across the globe, and no one has a clue who's taken possession of this. This is at a high level. Yeah.
All right. Well, actually, Andy, breaking news here. I do know where it's going. Scott Cooper says it's going into his safe. So anyways, folks, it looks like that's behind all this. Right?
What's your address, Scott?
Yeah, exactly, Scott. All right. So let me ask you this. So we've heard over the years by, various different people in the precious metal space who forecasting out about the world waking up to the end game for fiat currency, and there's going to be a run on precious metals. And you hear this talk about, okay, well then someday they're going to break the COMEX, right? They're going to take so much out of the COMEX that there's just not going to be enough there. And some people have said, oh, a lot of that might be rehypothecated, and we're not going to find out until there's enough demand. And I know the COMEX right now, at least early this year, I'm guessing this is still going on, because of this record demand, they're reaching into the LBMA and they're pulling those ounces into the COMEX, which are now getting pulled out of the COMEX. So what is the risk here, if any, of a breaking of the COMEX or a breaking of the LBMA under this demand?
I think the risk of breaking of the LBMA is far greater than breaking of the COMEX, because all of this gold is now coming into the United States, it seems. And I really do believe that, honest to God, believe with the passage of the Genius Act, we have entered a new monetary system, and gold will be the anchor to it. And it's not going to leave the United States. We're going to vacuum over as much as we can. It's not about tariffs, and it's not about arbitrage, like a lot of the talking heads have said all along. And I said, no, it is not. This is far more significant. So the LBMA is already showing signs of breaking. You have the guy, I could scour through 50 pages of notes on here and find his actual name. I'll see if I can do it as I'm talking about it. But he used to run ICBC Bank in China. He's Japanese. He's the head of the Japanese commodity exchange. And he just came out and said that the LBMA, he said local, meaning location, London and Zurich have no platinum, zero. Virtually nothing, yet they're trading 3 million ounces a day of spot contracts that could be delivered. We've talked about silver. Silver has the LBMA has 155 million ounces of silver there. It's the lowest float that they've ever had in the history of the LBMA. Now, a float means the amount of silver backing the contracts. They have somewhere just shy of 750, 800 million ounces altogether, of which SLV owns 80% of it. So, I mean, it's owned by the ETFs, supposedly. That 155 million ounces, David Jensen is a man who has a Substack. I would have him on your show. I want to get him on mine. He's awesome. And he talks about the LBMA numbers. He says they trade about 190 million ounces a day off of a 155 million ounce float. Well, what could possibly go wrong? Well, it gets even worse than that. He says that they did a survey, the LBMA and the member bullion banks did a survey a few years ago where they said, yeah, those numbers are massively understated by as much as 10 times. Because they only post the final settlement numbers, not all the trades throughout the day. So they're doing 10 times as many trades as just the final settlement numbers. So what he says is they're trading 1.9 billion with a B ounces of silver per day, every day, off of a 155 million ounce float. Now, if we take a step back, and it's very similar with platinum and very similar with gold, not as bad with gold, maybe worse with platinum. And when you look at what the Bank of England said earlier this year, yeah, we're a T+1 exchange, the LBMA. T is trade day Monday, +1 Tuesday. Wednesday, those bars need to be moving to you. So, Adam Taggart owns a multinational jewelry fabricating company, and you have contracts at the LBMA, so you can make your gold and silver jewelry. And okay, we need to make stuff this month, so you trade in your contract. They say, Adam, sorry, brother, I know you're expecting those bars moving to you in 3 days, but we here at the Bank of England have a shortage of manpower and trucks. It's 8-week delay. Really? That's what you get. That's what you call getting caught with your pants down. Now, there are people like Tom Luongo, and I believe he's probably onto something, that Trump is trying to stick it to the Bank of England and to the crown. And a lot of it has to do with exposing this and exposing their banks, who, if you listen to Tom's arguments, they're convincing. Bottom line is that forever, through what's called exchange for physical, it was a two-way street. Metal would go back and forth and back and forth and back and forth. Question is, if it's leaving COMEX, it ain't going forth, right? It came back, it ain't going forth. Mm-hmm. So if that really is the equation, if that really is the deal, then what does T plus 8 weeks mean? Does it mean we got to try in 8 weeks to get silver so we don't default? Or is it really that much demand where they don't have the ability to move your bars in a rapid fashion? That's just nonsense to me. So I don't know. I would think, if I had to guess, that you could see, and by the way, I'd like to say one other thing, and that is, when the BRICS grain exchange was developed a year or two ago, the guy that's running it said, we produce more wheat and consume more than they do in the West, but we can't control price. It's controlled on COMEX. But with the development of this new exchange, that's going to change. They're also building the BRICS Precious Metals Exchange, and exchanges are popping up all around Singapore, St. Petersburg, Moscow, Dubai. You're going to see price setting, I think, move to the east. I think the LBMA, if I had to guess, of the three, like the Shanghai and the East, COMEX, the LBMA, to me, the one that's in the biggest amount of trouble and could really actually find themselves up a river with no paddle would be the LBMA, far more so than the COMEX.
Okay.
But that would send reverberation through the whole system, the whole Western system.
Do you feel, as someone who watches this industry closely, do you feel like you have a good gauge of their fuel tank for supply?
Well, they post numbers. You could pull it up right now. You could say graph of LBMA silver chart. You'll see it's fallen at a 45-degree angle. Their gold isn't as bad, but you have to ask yourself, are these numbers really even accurate? Are they being honest about it? I don't know. Right. But if you take it at face value, their platinum and their silver are in big trouble. Their gold isn't quite as bad, but it's interesting too. If you look at the shorting on COMEX, what's his name? Nick Laird. Nick Laird does a wonderful site, does charting. And he shows a chart of all of the commodities and the short positions on COMEX. The largest short position by far, by 8 Western banks, in any commodity ever traded on the history of the COMEX is in silver. Number 2 is platinum. Number 3 is gold. So platinum and silver are literally being drained out of those exchanges, and they have a fraction of the amount of underlying metal as the amount of spot deliverable contracts that are being traded. I have been arguing since 2020 that these countries in the global south have, for the last several years, were sophisticated, coordinated, motivated, and wealthy, and were using the suppression of the Western paper market, in fact, aiding and abetting its suppression, so they could go all around the world and pick the pockets,
Right.
little by little, from all of the exchanges and venues like the miners directly. That doesn't affect the price. Well, you're getting to that point where there's not really a whole lot left in London to pick, and you got the head of the Tokyo Metals Exchange saying there's nothing in London and in Zurich in regards to platinum, but they're trading 3 million ounces a day in deliverable contracts. What could possibly go wrong? And I think you may see that.
So let me just make sure I heard you correctly. Did you say that silver is the most shorted?
Yes.
Okay.
Yep. So it has the largest concentrated short position.
Okay.
Massively concentrated.
So if the supply is draining, then it just seems like mathematically, if the momentum continues, there's a date with destiny where there could be a massive short squeeze, meaning the price of silver could go just bonkers at some point in time.
All it takes is one of the banks. All it takes is one of the banks to break ranks. Like, I'm not doing this anymore, this is insane, and start to cover, and then it's like the London gold pool that fell apart, and all it takes is one. And I think it is an existential threat to these banks. And maybe that is part of the reason we're seeing these insane deliveries into COMEX, because who was short on COMEX? Oh yeah, it was the Western banks, right? They're the ones that were short. So who's going to be holding the bag on the other side is the question. Will it be hedge funds? Will it be the European banks, like guys like Tom Luongo would probably argue? Maybe. The point of it is we don't know who's bringing all this gold and silver in, but if you saw this stuff coming and you were worried about tariffs and you were worried, you'd bring the metal back. So I think it's deeper than that, but I think if you're going to do a new system in the West that is tied to gold as an anchor, you can't have your big banks massively short, or the whole system blows up before it even gets started. So maybe that's part of it. They're bringing it back to reshort, to cover their shorts, and it ain't ever leaving again. It's never going to go back to London, I think, if President Trump has anything to say with it, would be my guess. Now, I really do believe this. I really do believe that someone got in his ear and said, we must do this because the rest of the world is draining what is available. When you have China, the largest producer of gold in the world and the second largest producer of silver in the world, flying all around Latin America, buying silver before it's even called silver out of the ground from Mexico and Peru, right, and the same thing with gold, and then sending it back to China to refine it. Well, why would the largest producer and the second largest producer of silver in the world need to do this? And it just goes to show that they see things they're 3, 4, 5 steps becoming ahead.
Scarce. Yeah. Okay. Yes. So a couple of things here, but first, let me just make sure. So as you have your view of the precious metals, I know there's lots of reasons why you're bullish on their future price performance, but with silver, in particular, it sounds like one of the things that you think is a material potential upside factor is this, I'll call it the optionality of there being a massive short squeeze at some point.
100%. Yeah, and I think the commercial banks will be on the right side of it. I think most likely
they're trying to get on the right side of it,
right now.
But yes, who else? European banks, whoever, they're going to be the patsies who took over those shorts and get crushed. But for the average investor, this is something that you have the potential to play, right? So silver is still attractively priced, I'm guessing, in your eyes.
Yeah, the term is asymmetrical. It has the lowest downside and the highest upside of any asset I've ever seen before. And yes, it's certainly not too late with silver.
Okay. So to something you were saying, so we've seen over recent years, the West wake up to, you know what, we were too dependent upon the East for a number of critical commodities, critical supplies that we're going to have to start reshoring, right? So we're going to have to start caring about rare earths and how to refine them. We're going to have to take over production of pharmaceuticals, chips, all that type of stuff. This is not news to anybody. This has all been in the media. I'm going to pull up a a cartoon here that sadly I think was created 12 years ago, but it's still just as relevant today. This is from I think Axel Merck initially commissioned this, but basically this represents the transfer of physical bullion from west to east, where we have been happy to accept fiat currency in exchange for hard bullion. And as you said earlier, China has been just, very happy to make that trade, right? Who's really winning this war if all the bullion is piling up over here on the Chinese side, right? So my question is will we potentially see, do you expect to see, just like we've done with rare earths and pharmaceuticals and chips, the West to finally get religion and say, you know what, we're gonna stop this flow of physical bullion from west to east?
You would hope so. They're still doing it, though. You can see it by the arbitrage numbers. The price of gold and silver in Shanghai is 10% or so higher than it is, at least silver is. I haven't looked at gold the last few days, but it's much higher. Yes, in general, it should. The commercial bank shouldn't send it over there anymore. And maybe it's not all coming from the West. Maybe it's coming some from London and Switzerland, not to come from the United States. But yes, in general, that has to happen. And I think
let me just ask you this. So the banks may wake up or whatever, right? But I'm almost talking more at the sovereign level where, like you're saying, you suspect that Besant, under the instructions of Trump, is now saying, you know what, gold is a strategic asset in a way that we haven't been thinking about it that way for a while. We're starting to build up in our coffers. Could you see almost like a presidential executive order or congressional order that says, you know what, we're just saying this is so strategic anymore, we're just not going to let it flow outside of our
I think I do, and I think they're going to revalue gold. I do, in my heart, I do, because you mentioned bringing back manufacturing. Well, how do you do that? Adam? You can't really in this environment. You can, but you can't, because Triffin's dilemma says that the rest of the world can make that stuff way cheaper than we can. So how do you compete? I guess you do it just for your own country, but it's not a great business if in a globalized world. How do you do it? I think we want to lose the world reserve status. I believe that in my soul. Vice President Vance has said it, wrote about it on White House letterhead, that we're at a point where being the reserve currency isn't such a good thing anymore because of Triffin's dilemma. And so how do you bring back manufacturing? We owe $28 trillion in 3 years. In maturing treasuries, we've taken $15 trillion in tax revenue. That doesn't even count the trades imbalance or the budget deficit of $3 trillion a year. We're a third of the way there in 3 years. I think they're going to default on the dollar. I don't think they want to be the world reserve currency anymore. In order to bring back manufacturing, what do I mean by that? Judy Shelton, what did she say? They're going to back on July 4th next year. She told me and you this. They're going to issue treasuries pegged to gold, right? Next year. Well, why would they do that? They would do that to have zero borrowing costs on the back end of the treasury market. Zero, redeemable in gold. If you go out to 50-year, like she said would start, there'd be a little coupon on it, plus the gold redeemability. You go all the way down maybe to 10, no coupon, zero interest, redeemable in gold. Well, what does that do? That allows you to have zero borrowing costs to bring back your manufacturing. Now, how do you make your manufacturing competitive? You devalue the dollar. How do you do that? You revalue gold. And if James Rickards is right, or Mike Maloney, he says 10,000, Rickards says 24,000. The president would tell the Treasury revalue gold right now. The Treasury tells the Federal Reserve with no congressional approval, do it. It's held in the gold revaluation account. They put it at 24,000 an ounce. Like Rickards says, this is him, not me. That gives the Treasury Department $6 trillion free and clear. Treasury issues gold certificates to the Fed. The Fed prints $6 trillion out of thin air, devalues the dollar tremendously, gives it to the Treasury general account, who can start to work down debt. The Fed does not have access to that gold. It's collateral, but they only have claim on the cash value of that gold. Now you just massively devalue the dollar. That is what revaluing gold is. That's what Roosevelt did. That is what it is. So now you devalue the dollar and you have zero coupon on the back end of the bond market, so you can bring back your manufacturing inexpensively and sell your goods inexpensively. Well, how do you run the government? Oh, I got a good idea. Let's call it the Genius Act. And we'll have every corporation and bank on the planet start issuing U.S. Treasury backed, synthetically backed stable coins.
Right.
And
that's going to think
$2 trillion a year. Yes. And so this is how you give demand to the front end of the market. The back end of the market's pegged to gold. And if I'm right, and if Judy is right, you'll see gold higher than you can imagine. Now, the only hiccup in that is a soft default. Richard Russell said for years they can inflate or they can die, they being the Fed. Well, this is a soft default on the dollar in order to reshore manufacturing, in order to at some point grow our way out of this problem with 60% of the country having no college education. We must have that stuff, especially the critical stuff. This would give us the ability to do it. Now, the only thing that I could see in the middle of that would be universal basic income for a few years, because if you don't have assets, you're dead in the water. If you hold your money in dollars, you're dead.
Yeah. Yeah. Okay. So you just answered my question there, more or less, which is, okay, that helps us as a sovereign country versus other sovereign countries, because kind of like
it helps them too, though. It helps them too, because who's been buying all the gold? Oh, that's right. The central banks of the world have been eating gold at a level no one has ever seen before. These people understand the game. They talk to each other. Just like 9 years of net central bank selling, you started to see the Bundesbank say, give us back our gold. And then you saw the next year, 2018, Dutch, Austrian, Hungary, Turkey, Poland, all these banks did the same thing and bought more gold than they did combined in the 60 years previously. 2019, they doubled that number. And then the BIS says, oh, by the way, Basel III Accord, gold is now tier 1. Oh, really? So you didn't know about that. And you didn't start bringing all your gold home from the New York Fed and the Bank of England and start buying it. They know where we're going. And I think they're all clued in by the BIS and the IMF, and they all speak. If I was ahead of a massive deal and you're my best friend, you don't think I'm going to wink, wink, nod, nod, Adam, you might want to buy gold. That's just what a rumor I heard. They do that. And that's why these moves are always very much in front of everybody else. But these moves are so big and so significant and gaining zero media attention that in and of itself is wholly significant. So whatever is happening with the gold and silver market, goes far beyond tariffs. It goes far beyond arbitrage. And that's what we're led to believe. But I bet my life on it that it is many magnitudes higher, more along the lines of realizing that if we don't accumulate the commodities, the rest of the world is and has a huge jump start on us, using our stupidity of suppression of the commodity markets to support the illusion of bond market strength, of dollar and Western system strength, and of the military industrial complex who needs silver for weaponry. All of this stuff makes perfect sense. And I think we got called on the carpet. And fortunately, someone in this administration, I think, convinced President Trump that was the case. And it appears this is what they're doing. So gold and silver, to me, will not only be a life raft, I think they will outperform people's expectation. But I don't sell it that way. To me, it's wealth. Don't buy it to get wealthy. Buy it because it is wealth. And here we are 6,000 years after it was mentioned 400 or 500 times in the Bible, and the biggest money in the world. Not only is buying it hand over fist, they're removing it from the exchanges, which is the complete absence and removal of counterparty risk, like treasuries were to Russia. Very risky. They can be taken. Well, you can't take your gold if it's off the exchange. And I think that's what they're seeing.
Okay. And again, just to boil this all down, for all these reasons, but to your point of, hey, look, the people who get crushed if this transition happens the way you think it will are those who don't own assets, right? Or don't own these types of assets, right? So this is why you say to the individual investor who's listening, this is why you want to get some precious metals. There's a whole bunch of reasons to get it, because it's wealth and just the devaluation, general ongoing devaluation of fiat currency. These are all good reasons to own it. But if what you're talking about happens, you need to have some of this, or else you just get completely left behind and then have to subsist on UBI or whatever crumbs get thrown your way by the government to make it through that transition.
And it would be your patriotic duty. And I could see him saying that, look, we messed up a good thing. You don't see the Vice President of the United States in White House letterhead citing Triffin's dilemma and saying it's not good for us anymore. And here the Treasury Secretary says that he wants to preside over a new monetary system, a new Bretton Woods, and he thinks it'll happen in this administration, and then see something as significant as a stablecoin bill passed. That is a new monetary system. It is the beginning of it. These things are happening. They are. And as you told me that you did an interview with Rick yesterday, Rick Rule, who's meant so much to my career and And I love Rick, and I'll give him credit. One of his famous sayings is, if you save in dollars, you're destined to go broke. And if you are not a contrarian, you're destined to be a victim. And I believe that to be the case right now. Look at just the first 6 months of this year. In the first 7 months of this year, the dollar's down 11% and gold's up 38%. That's a net 50% swing in purchasing power in 7 months. May not finish the year that way, or maybe it finishes much higher, but the dollar is being eviscerated, and gold will only go higher in that environment in dollar terms, because the dollar is going to be sacrificed in order to maybe bring back manufacturing and give our future generations the life and opportunity they deserve.
Okay. All right. We got to go into kind of rapid fire answers here, Andy, just because I do want to get to a few questions from the audience, and I don't want to keep you too long.
All right. I promise. I have a hard time with that, but
no, I want you to get out there and start being celebrated. Yep. So let me just ask you this. There is still other countries' gold stored at the New York Fed, right? It all hasn't been repatriated, right?
It all hasn't, but a good portion of it has. I don't know, between the New York Fed and the Bank of England, between 30 and 40 countries have brought their gold back. And you hear Germany saying, we want the rest of our gold back, and that you'll see that following suit. A lot of the countries have brought all their gold back, but not everyone is, I guess you could say, adversarial or quasi-adversarial, or maybe see things the same way as some of these countries who have repatriated their gold. But I think you'll see over time, if it will leave, they'll want it back. You look at the Bank of England saying to Venezuela, no, you can't have your gold back. I think leaving your gold in the Bank of England or the New York Fed is as stupid as a mud wall.
Well, and that's what I was getting to, is, do you see the potential at some point in time where the U.S. government just says, hey, you know what? Gold's so important, we're not letting it leave our shores anymore.
Well, that's what we did in 71. Yes, I do. I think it could very well happen.
Whoever has the gold make the rules, and sorry, we got your gold. You know?
And who said that on Easter Sunday? President Trump. The golden art of negotiating, he who has the gold makes the rules. Now, that came out of left field, really, because I didn't know that we had all that gold. Well, we supposedly do, but we haven't audited it yet. But yes, these little clues, these crumbs, put them together, and they make a path that's very interesting.
Mm-hmm. Okay. All right. And I don't think I've asked you this before. If I have, we can skip over it. But let's talk about silver, the silver market, for a moment. It's much smaller than the gold market, particularly above ground silver, right? You mentioned that, sovereigns you think are now playing in this space. They're trying to do it quietly. They don't want to, seize up the market necessarily. But what about just a rogue billionaire? We've got plenty of billionaires now. Why not a rogue billionaire or a rogue corporation that's got 50 billion in its treasury or whatever? Just step in and say, you know what? We're just going to corner the market. We're just going to.
I forgot the guy's name. What the hell is the guy's name? There's a billionaire who just did that, and he's been all over Twitter talking about it. What is his name? David something. Come on. Do any of the listeners remember who I'm talking about? There is a billionaire out there who just bought a whole massive warehouse full of silver. Shows pictures of it on Twitter. Let's see if I can find his name.
Really, I haven't heard this yet. This is fascinating.
Come on.
If anybody in the live chat knows,
who's the billionaire that bought a whole bunch of silver lately? Let's see if we can. Someone's going to know this. It's all over Twitter. I talked about it for a few weeks.
It's but essentially what I just asked is happening.
David Bateman. In early 2025, tech entrepreneur David Bateman reportedly purchased approximately 12.69 million ounces of physical silver, equating to about 1.5% of the global silver reserves. And he's been talking, David Bateman. Go to him on X and look it up. And he shows it all. And he tells you why he's doing this. And he's a billionaire. So there is. And ask yourself, who just took possession of $7 billion worth of silver? We don't know about it. So maybe, just maybe, and if you are one of those guys, the last thing that you're going to do is talk about it until you have it in your warehouse, like David Bateman did. Now he's talking about it. So
build your book, maybe, then talk your book.
Right. And so maybe that is happening right now. And that's a valid point. And a lot of people say, well, if China's so interested, why don't they just buy it all? Because you cut off your nose to spite your face, because markets would seize up like that and everything would just stop. Slowly, the death by 1,000 paper cuts. Use their stupidity against them, they say to us. It's the art of war. And that's what they're doing. And David Bateman figured it out before others. And now he's talking about, check it out.
Well, exactly. And so I get why the sovereigns or why the banks want to do the drip, accumulate hopefully under the radar over a long period of time. But it's these rogue players, I think, that could come out and just seize up the system. They don't have those same concerns. A seized system helps them because I've got my $1.5 billion of silver now in a warehouse that's going to go to $3 billion if the system seizes up, right?
Yeah, well, 50% of the employees at NVIDIA are now worth $50 million or more, something like that. You could see, get a whole bunch of people to spend $20 million on silver, and in 10 minutes, the entire amount of silver in this country for retail is gone. That quick. And it all comes, so it's just the fact. I would argue that the people suppressing silver, in my mind, has been used to make high-tech weapons. I've talked about that ad nauseum, and I give the statistics and whatnot. It's not about the price as much as it is price wakes people up. Price is the greatest tool of misdirection, right? If you just suppress the price, people just won't even look. They just keep on walking, right? Especially when the movements are counterintuitive to what guys like you and I have been talking about. Yeah, you don't know what you're talking about, doesn't do anything, it just goes nowhere. Right, well, until it doesn't. And how does that happen? When countries around the world stand for delivery, which is now happening, which never did happen. So, what you and I talk about has been right. It's just the fact that the commercial banks, at the behest of the central banks or whoever, the military industrial complex, where you have 8 Western banks controlling this massive short position, well, why would they do it? That is the question. Why? It's not for profit. There's something far bigger behind it. And I think it's being exposed right now. And guys like David Bateman get it. And it's an interesting read. He talks a lot about it lately.
All right, I'll check him out. But I do feel that if more David Bateman jump into this pool, big, deep-pocketed billionaires / corporate treasuries that just say, hey, let's do that. Like, this could go real quick, faster than a lot of people expect.
It would go real quick. And that's the thing. Most of these very wealthy people, they made their money in traditional manners. And if you are very wealthy and have a financial advisor, money manager, chances are, they don't know a gold eagle if it fell on their foot. Now that will change, but guys like David Bateman and some of the other guys that we see, talking about this now, all of a sudden, wealthy people, very smart and influential, are starting to get it. So you're starting to see the people up at the top mention it. So it's hedge fund guys. It's getting there.
Okay. So let's see here. 2 last questions before we get a few from the audience here. So we have lower rates coming, right? Presumably that is because the economy is slowing enough that inflation, at least in the near term, becoming less of a worry, and it's more, hey, job market's starting to get weak, consumers are starting to struggle, right? So presumably, in that type of environment, maybe stocks won't do so well if they have to reflect a slowing economy, and right now they're priced to fantasy, right? With bonds, I've had a number of folks on recently, including Jim Masterzo, who I just released an interview with yesterday, who was saying, hey, I think there's kind of a good era for bonds coming up here where basically as the Fed cuts rates, that T-bill and chill trade starts going away, right? So what's going to happen to those trillions that are sitting in money market funds or T-bills right now? And he says, well, some percentage of that is going to go out in duration, right? Which is I'm going to move to the 2-year, the 5-year, the 10-year. I'm going to try to lock in 3.5%, 4% for several years, knowing that the short end is going to start coming down. And I can see that, right? But probably not all of it will. And there's a lot of people that are sitting in T-bill and chill because they're getting paid to be in real safety. And so, okay, if T-bills are going to start paying me less to sit in safety, where else can I sit in safety that offers a good return? And while gold doesn't give you an income per se, it has been appreciating very nicely in recent years. And I think that's catching more and more people's attention. So my question to you, Andy, is do you expect some material percentage of those trillions that are currently in T-bill and chill to find their way into the precious metals because people want safety assets that are performing well?
Anyone who would put their money in 10-year treasuries or higher, and I say this with respect to your guest, I think is out of their damn mind, period. And all you got to do is just go to shadowstats.com and see real inflation's 11%, the way it used to be calculated. And I think that a lot of people are in short-term treasuries. I own some short-term treasuries, like 90-day or less treasuries, 4-week treasuries, whatever, because it has been attractive. You're right. And let's not forget that when the Fed lowered rates by 100 basis points not too long ago, what happened to the 10-year? Went up by 100 basis points. That's the market's way of saying, we're not going to let you lower rates on the federal funds rate, lower the front end of the curve, and expect us not to understand that that's inflationary. So if you don't think we expect more for longer duration, guess what? We do. The Fed can't control the back end of the bond market unless they start to monetize it, which is the pathway to hyperinflation and Weimar Republic. So I think they'd be out of their mind to not move it to gold. Let's just look at 3 numbers. 25 years. Last 25 years, gold has doubled the performance of the 10-year treasury. How about last year? Gold was up 40%, the 10-year treasury up 4.5%. How about this year? Halfway through the year, that 10-year treasury is up just over 2%. The dollar's down 10. Oh, you're negative 8%. Gold's up almost 40. That's a 50% swing. So I think a lot of people are doing that. It's starting up at levels in central bank levels where they're selling treasuries and buying things like gold, which not only has outperformed it, but like we're seeing with the repatriation and the removal from the exchanges, has no counterparty liability. So I think it's a growing dilemma that we have, and this is why we have the passage of the stablecoin bill, because the natural organic demand for our treasuries is like, really? You're going to have to print that much money, and you expect us to take 4% for 10 years? I don't think that's really in my best interest. So you're beginning to see, well, we have a problem, folks. No one wants our treasuries. I got an idea. Let's create stable coins and have them one-to-one backed by it. That's a great idea. And then 0 interest on the long end, so it's redeemable in gold. That, to me, makes more sense. But to your point, where else do you put your money? Because interest rates were suppressed for 30 years, all assets are still distorted. Farmland, real estate, stocks, bonds, it's all distorted, because if interest rates and inflation were actually allowed to meet naturally, inflation's way up here, interest rates would have to be up here to compensate. So you're getting a negative real return, in other words, on treasuries, because inflation that is misreported and underreported by the BLS is way below or way above the yield. So
you're saying the true real rate is quite negative.
Yes,
it's much more negative.
It's negative. Yeah. So where do you put it? And when that happens, if it were allowed to find equilibrium, stocks, bonds, real estate, the banks and the insurance companies who are low with treasuries, they'd all implode. This is what happens when you screw with Mother Nature the way that we did. We should have never suppressed interest rates the way that we did and created distortions in asset prices and misallocations in resource and capital. And you can see that just by your home price. What's your home worth at 3? What's it worth at 7? What's it worth at 10? And they say, we want more first-time home buyers to be able to buy homes. So we want to lower the rates, the mortgage rates get better. But isn't that what got us in this problem to begin with? You lower rates, sure, you get an easier loan, go deeper into debt, better terms, but real estate will go higher because more people can buy it. So this is the quandary we're in. So yeah, I think what he said from an academic standpoint and old school is right. But I think a lot of the people who are in short-term treasuries, like myself, because I have gold coming on my ears and vaults all around the world, and I own a gold company.
Right.
I'm afraid to go into the equity market. People who are in short-term treasuries are afraid of risk right now. And I think there's every bit the amount of risk in 10-year treasuries right now as there is in the equity market for a different reason. But I would argue against his point that I don't think much, if any, of people who are in short-term treasuries will go any further than 2 years. And even that would make me itchy.
Okay. But just
so yeah, some will go into gold.
Just sort of mathematically, yeah. So some will go into gold. So let's be conservative. Let's say 5%. I mean, or a couple single-digit percent of what's currently in the trillions.
Yeah.
In T-bill and chill makes its way into gold and silver. So those markets are so small relative to stocks and bonds, and assets are priced at the margin. Even just those single-digit percentages coming into those markets should have a pretty tremendous upward price impact on gold, if indeed that were to happen.
Because because the majority of gold's performance over the last couple of years, without question, Adam, 1,000% has been central bank buying. And they haven't stopped. In fact, the polls suggest they're going to continue, and they say they expect to buy more next year. So you inject a fraction of the big money and the retail side into this market. When Silicon Bank failed and Signature Bank failed, we added 14,000 clients in 45 days, and those banks were illegally bailed out by Janet Yellen, illegally, according to the Dodd-Frank Act. What happens if they would have been let to fail like little old bank in Lindsay, Oklahoma that was bailed in, that no one ever talks about? They're bailed in. All those depositors lost that money. No one talks about it, but what happens if it were those 14,000 would have turned into 140,000? Well, everyone freak out as their money is being drained out of the banking system, or David Rogers' Web, The Great Taking. All it takes is one event for people to wake up and say, my God, do you see what's happening? And where do we go? Well, everything is distorted to all-time highs because of suppression of interest rates. But the one thing they didn't let go higher was gold and silver. Why? Because, well, the silver, I argue, is military-industrial complex, but it's the same thing with gold. They represent the canary in the mine shaft, that right. This is all an illusion. So you have to step on it. And it was easy to do it by leasing central bank gold to the commercial banks who would forward sell it, short the market, drive the price down, put the excess, the proceeds from those short sales into treasuries, drive down rates, make the spread between the 0.5% lease rate and the treasury market, and be told from the central banks, you have immunity, don't worry. That is, in essence, what we learned when there was a lawsuit in Louisiana that named American Barrick, JP Morgan in this lawsuit. And the judge, more or less, the attorney for Barrick said, we move for dismissal. This is unfounded. The judge says, no, it's going to discovery. There's more here than meets the eye. And at the end, even though the results of the case were sealed, what we learned was that they admitted, fine, we did it. But we were, yes, we did it. Barrick said we did it, but we were told by JP Morgan, who was told by the Treasury Department to do this, and we will never forward sell again. They admitted all of this stuff in federal court. Just like the interview between Arcadia Economics and what's his name, the former CFTC commissioner, the head of the former CFTC died after he had,
Bart Chilton.
Bart Chilton. Yes, he admitted all this stuff happened. So these things are happening. Markets have been suppressed, but I don't know. I think this stuff is all going to unwind. And if 1% of the public wakes up to this, or 5% of that money that's holed up there, it would be so massive to the gold and silver industry, it's not even funny.
Okay. Well, again, just to note for folks, unless things change, we're looking at a new era of rate cuts ahead of us, and that's going to start to end the T-bill and chill, and that money is going to have to go somewhere. So if Andy's right, and some of it makes its way into precious metals, again, another big tailwind, the precious metals.
Where would you put your money, Adam, if you were in T-bills and millions of dollars, or hundreds of millions? Where are you going to put it? Into overvalued equities, overvalued real estate, a bond market? No. Where are you going to put it? Yeah. Some of it has to go into commodities, and some of it has to go into gold and silver. And maybe that's why you're seeing the billions coming into COMEX, 100+ billion that we know of. I don't know. Maybe that's why the central banks have been the biggest buyers in the world for the last 5 years, because they see long before we do, because they write the playbook, what's coming.
Okay. All right. Last question before I get to the Q&A. So you referenced the webinar that I did last night with Rick Rule and Frank Trotter, who are launching BattleBank. And BattleBank essentially is a new bank. Frank Trotter was the founder of EverBank, which Rick Rule was an investor in. And so they've got a lot of history and experience launching banks like this. And this is a virtual bank, meaning there's aren't physical branches around the world, but you can bank anywhere, anytime through them, through the internet, magic of the internet. And they are essentially building this bank as a community bank, really for the sound money audience. It's for people that think like you, Andy, who want to deal with a bank that has great customer service, believes in the value and principles of sound money, is very precious metals friendly. In fact, the bank will let you not only custody precious metals with them, but you could borrow against your precious metals. And anyways, this is something Rick has been mentioning for years. It took longer for this bank to launch than they had initially thought, and that's largely because the approval process just got really slowed down in the previous administration. But things have picked back up, and they are looking like they're finally going to be able to launch by the end of this year, early next year at the latest, is what they're currently targeting. So anyways, folks, if you are interested in learning more about that bank, because most people don't have a great relationship with their bank. In fact, in most banks are pocketing a lot of the arbitrage they're making between what they can borrow with at low risk, like even buying treasuries versus what they're going to pay you in your savings account or your checking account. BattleBank is really constructed to try to treat the customer much better. They'll be paying much more competitive rates, much more true rates on deposits. If you're interested in learning more about that, just go to, let me pull it up here. Go to thoughtfulmoney.com/battle, and you can watch that webinar and learn more about the banking opportunity. Just to let you know, there are ways to become a depositor in the bank, or ways to even potentially become an investor in the bank. If you go watch the video there at thoughtfulmoney.com/battle, you'll find out how to do both of those. But I give all this background, Andy, because I believe we didn't talk about this directly yesterday, but you are one of the partners BattleBank has reached out to partner with on the precious metal side of things, correct?
Yeah, and I'm in the process of filling out an application to become an investor in the bank as well. There still are some spots left, and I played golf for the head of investing for the bank not too long ago. Really liked the guy, and he answered all my questions, so I'm doing that too. Rick has meant more to me than anyone in the industry for 25 years, and Frank is one of the greatest guys I've met in the industry too. They're amazing people. So yeah, we used to do what they're doing, and because we're not a bank, I stopped doing it. It's a gray area. There are lending laws that are not blue skied. Every state has different lending laws and whatnot. So we stopped doing the lending against physical metal program. And so I had many meetings with them, told them how I did things, and said I'd love to be part of it. So in essence, they will have the ability in any of our 9 BRICS facilities to if your gold is right here, they'll move it from here over to their account inside the vault, and they'll lend it to they'll give you a line of credit in essence against that gold if you want to borrow against it. That's right, and never has to leave the BRICS facility. So because they're virtual, so it is a neat way to unlock the equity of your metal. Gold bugs don't want to sell their gold, never do. And so if they want to take a loan out against it and they have it in a storage facility, any of ours, they will have opened up an account in all the BRICS facilities we're in, and it's just a simple transfer. Once the loan is paid back, it goes right back into your account. So it's a cool program offered by, people who are legendary in the industry, and it's an honor to be working with them for sure.
All right, great. All right, folks. Well, again, look, if you're interested in learning more about the bank, especially knowing now that Andy is involved as well, again, go to thoughtfulmoney.com/battle and watch that video if you haven't already seen it. All right, so we got a few minutes left here, and we've got. I'd like to start pulling some questions here from the audience.
Sure.
I did see that people asked some questions early on. Folks, if you did, ask it again, just so it's popping up here at the fresh part of the chat, so I can find it easily. But let's see here if I can find anything that folks are asking here. Bear with me one second here, Andy. While I'm doing this, is there anything else that's on your radar that I haven't thought to ask you about yet that's worth that you would like folks to know about this week?
I think, I don't know if I spoke with you about the developments with Enbridge, with the BRICS. It is worth mentioning that it was a big deal to me. I probably mentioned on one of our earlier podcasts that they connected this bridge technology with 11 Asian countries and 5 Middle Eastern countries. The countries, ASEAN is the acronym, and these are the countries in Southeast Asia. And I talked a lot about that, how that was a big deal to me, that they were still progressing with their agenda with Enbridge. Forbes came out with an article just the other day that really, I think, puts an exclamation point on this. And basically what they said was, and by the way, Lavrov, the Russian foreign minister, came out and said, we're opening up the bridge technology to the rest of the world, just not the United States, the European Union, or the UK. And they said, yeah, so we have opened this up right now to the Asian countries. Well, that, I talked about it, and I suppose most people heard it and just went in one ear and out the other. So Forbes comes out with an article saying that the United States is at this point third in trading, with distant third right now. We trade with China behind Canada and Mexico, third, like 6%, the lowest amount of trade in over 20 years. And that China's now largest trading partner by far are these Asian countries. And these Asian countries have twice the population of the United States, between 7 and 800 million people, and the fastest growing middle class in the world. And they are now connected to the bridge technology that sidesteps SWIFT and gives immediate settlement, 7 seconds. And I think this is a big deal. They are moving forward. And now you have BRICS Pay along with BRICS Bridge. BRICS Bridge is central bank to central bank. BRICS Pay is business to business. It's retail. Both are being run out through the Belt Road Initiative. That's 75% of human population. So you put these two groups together with the BRICS, you're talking 85 to 90% of human population moving away from the dollar. The settlement in local currencies starts to hurt the settlement status of the dollar. The purchasing of gold and things like that, which act as the framework, the skeletal system, because at the same time, China came out and said, we are now making the yuan immediately convertible into gold through the Shanghai Metals Exchange, the new exchange that's finished in Hong Kong. You can have it delivered in and take possession without converting to dollars. The next exchange right now is in the process of being built in Saudi Arabia. So you're going to have things like China buying oil from Saudi Arabia using the central bank digital currency, the digital yuan, over the bridge technology, which is not compliant with SWIFT, can't be sanctioned, can't be messed with. And then the Saudis can take that and immediately take gold in their own country. The Shanghai Metals Exchange is expanding their network throughout the Belt Road through multi-jurisdictional vaults all around. It's the ecosystem. It is the skeletal framework of what will be the new BRICS settlement currency. Now, China's taking the lead on it to not aggravate President Trump. But these are things that need to be kept abreast of in the periphery, because this, to me, sets the stage for why we might be doing the things that we're doing with gold, because he and his advisors, I think, see this is happening, and it's a trend already firmly in motion. So other than that, no, I mean, I'm happy to take any questions if there are
okay.
any.
And I remember the presentation that you did at Rick's symposium last month, and it might be good one of these times to let you go through your slides and all of this, which I think would be good.
Sure, be
let me just, I know you could talk about this for another hour, but let me just ask a real quick question, and then we'll get on to a few questions here. Just channeling Brent Johnson for a moment. We're striking these new trade deals. I can't imagine that if the U.S. doesn't like what's going on there with these competing systems being put in place, that it's not putting provisions in a lot of these trade deals with the big players, the Japans and Indias of the world. Hey, as part of this deal, with this new deal we're striking together, you're going to have commitments that you're not going to be participating in some of these competitive new things that are going on. And if we are able to successfully help negotiate a peace between Russia and Ukraine, and relations between Russia and the US, Russia and the West start thawing, and the US starts trying to offer lots of carrots to Russia to do some of the things it wants it to do, I got to imagine part of those discussions are going to be, hey, you're not going to be fully in support of these things that are against our interests. Do you have a general reaction to that?
I think that's it makes sense, but I mean, look at how opinion flip-flops from Democrat to Republican back to Democrat. Trump isn't here forever, and I think that they may say that. Like, look at Saudi Arabia and India are a good example. Saudi Arabia was admitted into BRICS. They've got one leg in and one leg out to appease the West, like you're saying, and Trump. But yet, when Enbridge was designed, it was designed by China, Hong Kong, Thailand, United Arab Emirates. The fifth player fully integrated into Enbridge, the fifth, was Saudi Arabia. Saudi Arabia said, yeah, we'll still take dollars, but not just dollars. But hey, we love the West, but we're going to take other things too. The exchange, the Shanghai Metals Exchange, is being built in Saudi Arabia right now, which will allow them to trade over the bridge and settle in gold. The West will have no idea. And the same thing is true. India says, we're going to keep on doing our deals with Russia. We're going to buy their oil. We don't care what the West is saying. My point is that I think at some point, the West is starting to lose its leverage. So yes, this is what we are probably going to be led to believe, that these things are there, but to me, they mean nothing. In the end, these countries will do what these countries will do. And if you look at the Asian countries having twice the population and a growing, just those countries alone, the Asian countries, which aren't even part of BRICS, you're beginning to see influence is starting to shift and move eastward, as is wealth, as is real money. So I don't look at that as an impediment. I look at it as a smokescreen more than anything.
Okay. Like I said, we could talk about that for an hour, and maybe we will one day to do the topic more justice. Terrence just asking kind of a fundamental question here. How much gold and silver are mined every year?
The number of gold escapes me. I'll have to look. Maybe a couple 100 million ounces a year. Silver is about 800 million ounces that comes to market. But of that 800 million ounces, if we can pull out recycling, which is a little bit, only about 200 of the 800 million comes from companies that mine silver, like First Majestic, as an example. Because silver is found in nature, like your skin is epidermis. Silver is found in a level called epithermal, right near the surface. Big deposits were found forever ago. So 70 to 80% of all the silver that is brought to market comes from companies mining completely different.
Yeah.
Yes, tin or copper or gold. Here's some silver. So yeah, it's depleting in nature. And for 5,000 years, it was 16 to 1 in the ground, 16 silver, 1 gold. Keith Neumeyer has been for 3 years saying it was 8 to 1. Now it's 7 to 1. It's disappearing. 7 ounces of silver for every 1 ounce of gold. So about 800 million ounces of silver, and I think about 250 in gold. I think. Don't quote me on gold, but silver I'm right on.
Okay. And then just cap another question on top of that. Most of the gold that gets mined stays around, right?
Yes,
either
correct.
in coin bar form or in jewelry, where most of the silver that gets mined gets commercially used, and no small amount of that gets kind of used up in a way where it's hard to recover, correct?
Right. I mean, if you have $12 worth of silver in an iPhone, does it make sense to rip it apart when you're paying more than that per hour for the person to do it? So no, it doesn't. And silver is, most of the silver that has been used for the last 80 years is in landfills, things that have a tiny, tiny bit of silver in the motherboard or within the electrical components. Whereas, yeah, to your point, most of the gold minted since Genesis, or mined since Genesis, is still here. And even gold that you pull out of the bottom of the ocean in a ship from 300 years ago can look brand new.
Right.
But silver, because of its industrial applications, whether in military applications, like 13 to 14 kilos in every cruise missile, down to a tiny bit of silver in the first black and white TV you ever watched, they either exploded or in landfills. And this is why it's gone from 16 to 1 to 8 to 1 to 7 to 1, meaning its geological footprint is decreasing.
Right. And even though its geological footprint is still 7 to 1, 10 to 1, or whatever you want to debate it to be, that's below ground. Above ground, right, there's actually a lot less silver than there is gold, right? Because of the commercial usage, correct?
Yeah, I think they think there's a couple, 2 or 3 billion ounces of silver above ground, and that's it. You get different numbers from different people, but not a lot. And a lot of it's held in bar form, and you'll get to a point, I think, maybe sooner than, maybe this is what all these deliveries are about with silver, where the industrials, Elon Musk, I need silver for my batteries in my cars, or Sony, Samsung, Panasonic, and the investors, the hedge funds, or the David, whatever his name is that I mentioned, the billionaire, they'll start to battle. Get it. I want David Bateman. I want to make money. I need it to make my stuff. And there's going to be a battle between the institutional or the commercial, the manufacturers who need it and the investors. I think that's coming. Maybe it's here right now.
Rocket J says, haven't gold and silver already made their run?
No, not even close. Not even close. I mean, yes, they've done very well, but not even close. And if it weren't for the central bank and by proxy commercial bank suppression of gold and silver, it would be massively higher. And it's funny, you know, people on one hand say that its performance really isn't that great in comparison to things like, you know, risk on trade and Nvidia and Apple, where, you know, you're getting 3 and 4 digit increase. Gold is slow and steady, and in an environment where the value of the currency is inherently meant to die, like all fiat currencies, it's going to continue to go. And as Rick Rule pointed out, and I've been saying it, citing examples, he said it just, Rick is just a master of the English language and is very simplistic too. He says, you know, people think things are getting expensive, but price anything you can think of from food to real estate and in gold, and it's cheap. So it's not that gold has made its run, it's that the dollar is continuing to lose its value. And as that continues to happen, the run that people perceive as gold going higher will only be accentuated in the face of a falling dollar. And the dollar will fall. Stephen Mirren, who just got into the vacated spot, he's the head of the author of the Mar-a-Lago Accord. He wants a devalued dollar. Goes back to my thesis. They're going to devalue the hell out of the dollar in order to do these things, and they're going to inflate. The dollar's down 10% this year. So is gold up 10% or 50%? Is it up because gold is up, or is it up because the dollar keeps on falling,
right,
magnifying?
It's staying the same, but dollar value just going down. Yeah.
Yes.
Okay, last question, and we'll just take the 30-second answer on this one because I'm sure there could be a very much longer one. But if we went to war with China, kinetic war with China, what do you think would happen to precious metals prices?
Who cares? We go to a kinetic war with China. Who gives a crap what happens to your gold? You just want to live through it. I mean, God forbid we ever are stupid enough to go to war with a country like China. And all bets are off at that point. At that point, who cares? I mean, I say that seriously. I mean, you get to a country who has that kind of technology that we do, that they do, it wouldn't be pleasant for all of us. But, you know, in general, you would think that all assets would probably run into trouble in the face of 2 nuclear superpowers battling it out. I think, you know, markets are going to freeze up, and what good does gold and silver do you when they're lobbing, or you got drones flying over dropping bombs on major cities? I mean, the whole thing is just beyond even comprehension. So I get it. Fair point. Let's just hope that that's something we don't ever have to deal with, because I can't even let my mind go there.
Yeah. Well, and even think, let's say we have it, and let's say we lose the war and our Chinese overlords take over America. Well, we know they like precious metals, so you're probably better off having some than not, even in that horrible future. It's more gallows humor, but yes, hopefully that.
But it's true. Every single war, who takes the spoils? The victor.
Right.
You know, what happened to Saddam Hussein's gold? What happened to Gaddafi's gold? Where did it go?
All gone. Yeah.
Just saying.
All right. You know, Andy, you're making me think that I'd like to have a conversation with you on one of these monthly catch-ups with. I do take the time periodically to remind this audience that even though this is a wealth building channel and we talk about money a lot, that money is a secondary form of wealth, not a primary form of wealth. It's a means, it's not the end in itself, right? The end is to have a rich life, right? Which is about relationships and health and purpose and experiences, right? And in precious metals is, again, the goal is not to die on a, you know, mattress made of gold. The goal is to have precious metals to protect your wealth so that you can really invest and enjoy the primary forms of wealth. So I'd love to get a sense from you when we have more time on what you think true wealth is, like what your plan is yes, I'm investing in all this stuff, but again, I'm investing it so I can do X in my life, right?
Totally. I'd love that. That'd be great. And that is the true meaning of it. And I have a client who is maybe the wealthiest person that I've ever spoken to, and unfortunately not in very good health right now. And we've had conversations that get pretty deep and echo exactly what you just said. You're right. One other thing to keep in mind when I was listening, another reason to own metal, quickly, when I was listening to the guy who developed BRICS Pay, he was being interviewed and he said, yeah, they were opening up to all these countries, just not the West. And the lady says, well, there's terrorists out there. How do we know this won't go into terrorist activity? She says, well, we have our think of the stable coins that are coming out now. Think of the same technology, that our software has AML, KYC, and KYT capabilities. And I left my company in Minnesota because we're the only licensed state in America that regulates the precious metals industry. So I take all these classes every year annually. That's what differentiates us from everyone else. We're licensed, bonded, and background checked. That's why I didn't move my company in Minnesota. But I know all this lingo. KYC, know your client. AML, anti-money laundering. KYT, know your transaction. Never heard that before. In all the years I've taken these classes, well, this new software is embedded with it. So when you talk about privacy, this kills two birds with one stone. Not only does it fund the Treasury market, but it's like a central bank digital currency in a stablecoin clothing, because the Fed will control the on-ramp and the off-ramp. And if they know who you are, where you got your money, and what you're buying, isn't that the same thing as a central bank digital currency just issued by a private corporation? Yes, it is. So just food for thought, privacy and outside the matrix, and being able to pass on money to your family and that kind of stuff. But yeah, I'd love to have that conversation, Adam. That'd be cool.
Okay. All right. Well, earmark that for one of these future ones. Folks, if you'd like to see that, just let us know in the comments here at the live chat. All right. Well, look, Andy, probably most important question for you. So for folks that have been watching this and saying, wow, maybe I don't have exposure yet to the precious metals, but would like to get some, or I've been dabbling, but I want to get serious about it. If they want to get in touch with you, and as a reminder for everybody, you and your firm, Miles Franklin, are the official endorsed precious metal solution for the Thoughtful Money audience. Where should folks go?
Yeah, so, I do things a little bit differently, and largely because of relationships that I have, but even guys like the Sprott brokers, where Rick used to run, they'll run business through Miles Franklin, and they disclose it to their clients, so it's not selling away. But I didn't want to be a traditional online company for a lot of reasons, and it's for guys like that as well, so their efforts weren't undercut. In any case, you send us an email at info@milesfranklin.com. You can go to our website, but we only allow purchasing a very small amount. But ask for our price list. Let us know that you came from this video, that you watched us, that you're a listener of Adam, and in the subject, and we will send you a price list that we update a couple times per week. You can ask any question that you heard on this, or any questions you have related to metals. If you want to be contacted, let us know. Put your phone number down. The price list. If you find prices better, let us know. More often than not, we'll beat it. We'll let you know if we can't, but 9.5 times out of 10, that price list will be as good as anywhere in the country. And if you find something better or more intriguing, let us know. We can probably make it work. What makes us different is we've never had a complaint in 35 years, and we're licensed, bonded, and background checked almost annually. Almost every country in America won't do business in Minnesota because they would have to be subservient the way we are to the Commissioner of Commerce. It holds us to a higher standard. So info@milesfranklin.com. If you don't get it, check your spam. 1 out of 10 will get flagged coming from a corporate server like ours, and it goes into your spam. But that is the best way to reach us. info@milesfranklin.com. Let us know that you came from here. In the subject line, no obligation to get the price list. No one will contact if you don't want to be, or any questions you have, or if they're directed to me, let us know, and we'll get right back to you and make it a good experience. I promise your listeners won't be the first customer complaint we've had in going on 36
All right.
years.
Well, one of the nice things is, since we started this relationship, I think officially back in March, the feedback from folks that have done business with you between now and then has been very high, which is
wonderful.
The reason why I did this, right? And folks, I've waxed long in the past about all the reasons for why we made Miles Franklin the endorsed partner for Thoughtful Money. So I won't get into all that here again, but it has to do with both the high degree of integrity of Andy specifically, but with the team that he's built there. But also the pricing, as well, highly competitive pricing, but also the high degree of customer service. And one of the reasons why I really like how Andy has, this sort of old-fashioned version of contact him by email is he really gives a white glove service, especially to the thoughtful money audience. So as he said, let them know you're coming from thoughtful money.
Please.
And Andy himself will walk you through, the thinking on what you should do, or one of his top lieutenants will. But they really take you by the hand and educate you before there's ever any offer there. It's just, hey, tell us what you're looking to do. Tell us about yourself. Here's what we recommend. You tell us what makes sense, and we'll do our best to fulfill that for you. So, okay. So folks, send that email to info@milesfranklin.com. If you enjoy these monthly check-ins with Andy and would like to see them continue, and Andy, I've already seen a number of folks in the live chat say, wow, this was another great discussion with Andy. Please let him know that by hitting the like button and then clicking the subscribe button below, as well as that little bell icon right next to it. I guess I'll just make a quick, if in addition to your precious metals, you want to get some help from a professional financial advisor about your overall wealth management, and maybe even answer the question, okay, how much of my total portfolio makes sense to put into precious metals? Well, then consider scheduling a free consultation with one of the financial advisors that Thoughtful Money endorses. These are the firms you see with me on this channel week in and week out. To do that, just fill out the short form there at thoughtfulmoney.com. Andy, it is always such a pleasure and honor to have you on here every month. I really enjoy these conversations, and I'm glad we're continuing to do this. I'm actually really interested to have that conversation with you about just what's this all for? Like, why are we building wealth like this? Like, how do we, but you specifically, plan to take the wealth you protect and live life to its fullest for you? So we'll earmark that hopefully for next time. I will give you the last word here, my friend. Anything else you want to say in parting to folks?
No, I mean, I think I've monopolized everyone's time enough. Just that the honor is mine. I guess I would just simply say, I don't know where else to put my money where I can feel safe about it anymore. And there is something to be said for removal of counterparty risk, for buying something that has outlived everything the world's thrown at it since biblical times. And it's old school for sure. What do they call it? The OG. But at the same time, you got the most well-funded and well-informed traders in the world, starting with the central banks 5 years ago, now progressing to the biggest money in this country, who sees gold and silver for something, I would say, worth far more than the paper that is used to buy it. And I think much of the world is looking at commodities as worth far more than the paper used to buy it. I'll just simply say what Rick says again. You save in dollars, you're going to go broke. You're not a contrarian, you're going to be a victim. And what Doug Casey says, what does Doug Casey say about that? I'm having a senior moment. What the hell does Doug Casey say? He says that, let's just forget that. Sorry, Doug. I
No,
what I was going to say. He has.
I know it's going to pop in your head the second you hop off here. Yeah,
it's in every one of my presentations that I do. I can't believe that I just had that senior moment. I guess I don't remember what it's at the end of every one of my presentations I do, like at Rick's conference. And I'm going to think about it the minute I hang up.
No worries. Like I said, it's going to come into your mind the second you hop off. When it does, send it to me. I'll put it in the comment below the video so folks can see it. But speaking of which, my friend, you're much too young to have a true senior moment here.
Well, my head is filled with so much useless information. I bet I can tell you, if you give me 7 seconds, I bet I can tell you what he says. Because if I don't have it, I don't want to make everyone wait for what Doug Casey says.
I'm sure folks are waiting with bated breath. So
here it is. I think, let me just put my glasses on, because again, I can't see. But the last slide is, of course, my presentation is loading. Okay, here it goes. The last one is, gold and silver are the only assets that are not simultaneously someone else's liability. Thank you, Doug, and I'm sorry for screwing that up, but it's true. That's the removal of counterparty risk. They're the only assets that at the same time are no one else's liability. So.
All right. Well, very well said, my friend. Look, happy 55th birthday. You are not even quite a year older than me. but you look about 15 years younger than me, so congratulations, my
For
friend.
tan, that's just the Florida tan. That's what's good for you. Tan actually makes you look younger, but I appreciate it, brother Adam. I really do. And more than words to say, thank you for having me. The honor is mine, and I'll look forward to picking up where we left off and talk about what it's all really about. What does it all mean? Next time, I'd love to do that.
All right. Well, look, log off of here. Go start getting celebrated for your birthday. Again, those are the things that matter most. Wish you a great 55th. Folks are giving you all sorts of great birthday wishes here as well in the live chat. Hope you're getting a chance to see those.
I don't see it. I don't. I just see a return here. But thank you. Honestly, thank you very much. I appreciate that.
All right. Well, Andy, look, have a great one. We'll see you next time.
Too,
everybody else, thanks so much for watching.